From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 31st, 2018. Today we're taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. We're starting here on the daily time frame. Look at the yellow shaded area towards the bottom of the chart, 108.90, 109.15. Follow it back in time to where the circles are on the left-hand side of the chart. Let's start with the green circle. Underneath the yellow zone, the market went to the green zone. So that's the first thing we want to note is while it's under the yellow zone, it's resistance. Blue circle, of course, it never made it through the yellow zone, found support, and turned around and went back up. The black circle, we see a couple of things happening. We find support for several days, couple of weeks, finding support into the yellow zone, finally broke underneath it, went down to the green zone. So that's what we're looking at. Historically, above the yellow zone, it finds support, potentially bounces back higher. Below the yellow zone, historically, it goes down to the green zone, or even lower down to the orange zone into the 107s. So we want to take that information, bring it to the right-hand side, and take a look at the current market. We are underneath the 108.90, 109.15 level, the yellow shaded area. So as long as we're underneath it, again, there's this expectation from history that it could go down to the green shaded area, and only if it gets back above the yellow zone do we look for it to start going back higher for the dollar yen. Zoom it in a couple of times here on the daily and take a look at the past 3 days. We have held, today included of course, we have held underneath that yellow zone 108.90 as resistance. So it's not too hard to see that as long as it's underneath here, we don't want to go long and buy the US yen. That would have been a terrible idea all week long to buy underneath the yellow shaded area. The only reason we would consider a long or buy would be that it gets back above the yellow shaded area. The expectation is underneath it is that there's a potential that it falls back down to the green shaded area, giving us an opportunity to trade the US yen today. As long as it's under that yellow zone, going short towards the green zone is the opportunity for the day today. The risk and stop loss, of course, would be that it breaks above the yellow zone. So if we're going to go short and sell this, we don't want it to get back above that yellow shaded area. So a stop loss would go right above the yellow zone to limit our potential impact. If the market changes in mind and breaks back above the yellow zone, we get out with minimal loss. But stop loss above it, selling into the yellow zone, targeting the green zone. Of course, we have news today from the Fed that could change all of this, so we want to pay attention to that news. But technically speaking, as long as it's underneath there, we are at resistance. Take it down to the 4-hour time frame. It gets a little bit more confusing, except for the fact that we still see over the past couple of days holding underneath that yellow shaded area. So again, I don't think you want to buy it underneath the yellow zone. Only reason to buy would be a break of the yellow zone, but likely, as long as it's underneath that yellow zone, an opportunity to go short on the US yen today, of course, given any news that we might see as we go throughout our day, but that's the expectation I have for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.